I am mining investor and editor of Resource Stock Digest, Gerardo del Real, here with my partner, Senor Mr. Nicolas Hodge, who is also an investor and the publisher of Daily Profit Cycle. This is the 252nd episode of our weekly therapy session that we like to call Investing in Bizarro World. We're going to talk markets. We're going to talk gold. We're going to talk on Patriot battery metals. We're going to talk crypto exchanges, uranium, a lot to get to as always. First and foremost, Senor Hodge, how goes you?
Estoy bien. Gerardo, how are you?
Excelente. Let's get to it. We talked a bit off air, right? Let's start with the markets, and it's let's start with the overall indices, which you follow more closely than I do, right? It seems like the markets are schizophrenic, for lack of a better word, right? The facts don't line up with the trading action, and it almost seems to me like, there's some behind the scenes like intervention and buying, because when I square the data that I'm seeing come out of the government's own numbers and I compare that with stock market performance, it seems like there's a disconnect there. One of those things has to correct, I would think, for this trading pattern in the overall indices to continue. Thoughts on kind of the bifurcation there, what's going on with it? Because it seems, again, schizophrenic is the best word I can use for it.
It's been a bit of a head scratcher, to be honest. So lots of things going on. You've got the stock market coming back up to near all-time record highs, which it fell off of in early 2022. You've got an election year, which is very interesting. And you've got Yellen, remember, who is in the Biden administration, who can move markets with her words and has done so before. You talk about maybe not manipulation, but a they or a thumb on the scale. And, that can materialize in sort of different ways. Last year, we were talking about the materialization of the short-term or 0 days till expiration options phenomenon. And that's still been a thing. Like heading into the end of 2023 in late December there was record notional short-term call buying that was seemingly propping that market up, right? Because you only have to do that either on the SPYs or on those, few stocks that are now responsible for, on any given day, 30 to 50% of the movement in that S&P index. So there's definitely some of that still going on. What else as far as the they? Like, look at the CPI numbers, which we should talk about because they just came out. Like, remember, it was Goldilocks in December. The Fed was easing, inflation was coming down, and you like drill down into those CPI numbers, and there was things in there like, I don't know, health insurance costs came down 27% for the month. Like, did your health insurance costs go down 27%? Like, we pay, by the way, as you know, 100% of the health insurance premiums for all of our employees because we're generous employers, and I can attest that. Our insurance costs certainly did not go down 27% in December. So there's another sort of manipulation or massaging of the data. And I don't want to get too far in the weeds, but the government often and throughout history has changed the calculation of that data, right? To how they calculate the CPI. So there's lots of that, sort of layers of the onion on how the establishment and the government gets involved. At the end of the day, it's sort of the same as it was. Or at least what I was telling you, inflation remains sticky high. You've got the CPI came back out at 3.4%. Housing prices, the shelter inflation starting to tick back up. You've got a Fed who said that they're going to cut this year, but they've got inflation going the wrong way. And yet, a couple of things. I'm looking at the 2-year yield. It went down today on what should have been like a hawkish CPI print, right?
Yep.
So that was interesting. The 10-year sort of stayed flat. Gold struggled to hold positions. So it's like I say, it's a bit of a head scratcher right now. Maybe I'll have some more to add to that, but what are your thoughts?
My thoughts on the overall indices are with you. All the narratives can't play out, right? Something is going to have to change. Either we're not going to get rate cuts or we are, but then the inflation data, the CPI number has to cooperate. We have housing defaults at the highest level in over a decade now. We have a dollar index that, is held in there well at 102. Gold looks like it's, setting up for its next leg higher. I'm curious to get your technical analysis on that, Nick, because I know that you and I have had conversations as we do, almost daily on Patriot Battery Metals. And I know that your order filled today. You had told me, and we talked about this on this podcast here before. You had said that the gap had to fill, and I think it was 827. And sure enough, it filled today, right? It traded just above the $8 level. And so I say all that to say, technically, where do you see gold overall indices? I can't make sense of them, but I don't trade them the way that you do. And then we'll talk resource stocks in a second, because I think there's some good conversations to be had around supply, demand, and where I see that going, because that's exciting to me.
Yeah, I was going to say one more thing on the macro markets, and that's back to that election year, right? So one of the things is going to be, is the administration willing to prop up the stock market, the economy, the economic prints, because it's an election year? And so this is a takeaway. This is something you should be watching, you, Gerardo, but you, the viewer, is does the government have the wherewithal and the license to continue to run up the debt and issue stimulus, right? And it's getting very interesting because Moody's already cut the credit worthiness of the U.S., if you remember, from stable to more risky. That was just in November. I know the past couple of months are a blur. And at the same time, you have people that are, very much not worried about the debt on both sides of the aisle. Even the New York Times was writing last week that the debt matters again. And so that's one narrative to watch. Is the government going to be able to prop it up? And so anyway, I wanted to get that out. As far as gold is concerned, I might need a couple more days to figure it out, but I like that it's held up above 2,000. I didn't like that it pulled back from the 2040 or 2050 level, but remaining above 2,000 gives it the energy it needs to stay in bullish trend. It doesn't let it get too far ahead of itself. I've told you that in order to get to the next leg up, you really got to get to 2,100 anyway. But as long as you remain above 2,000, I think you're technically and psychologically sound. We talked about a bit of a pullback in the gold equities last week, and that continued this week into the CPI print, because I think people thought that it was going to be a little bit hot, which it was, which meant that the Fed was going to have to remain hawkish, i.e. keep rates higher for longer, which is bad for gold. And so the GDX and the GDXJ sold off a little bit. I mean, I look at gold equities that I own, and they sold off. So it remains to be seen if this is a buying opportunity or a breakdown. I can't give you the answer right now, but I would lean towards a buying opportunity, and that's what I've been doing on the gold stocks.
Buying opportunity. Patriot, how's that gap now that it's closed? How's that looking technically? I know. Look, anytime I get friends and subscribers that have made millions of dollars texting me and telling me, is this it? Is it going back to 3? Is it going back to 2? Is it going back to $1? I know we're near a bottom, right? And I'm getting the calls and I'm getting the comments on Twitter. I mean, frankly, look, my personal portfolio, it sits up and down, millions of dollars just on that position alone. But again, context matters. We hit 52-week highs in June, right? So the way that the stock trades has always been volatile since the 16-cent level. It's done this many, many times. Yes, the price action is frustrating given the catalyst that we have for 2024. It'd be nice to get some news out. I'm hoping for news hopefully next week. Would love an update on the Albemarle relationship. Would love some assays. Would love to see what kind of grades we're hitting at CV9. As I said a couple of weeks ago, look, a lot of unanswered questions, right? I think we're going to start getting those answers. And I suspect the news will continue to be very, very positive. But make no mistake, just like every other Patriot shareholder, I don't care if you got in at 16 cents or $16, the last 6 months of price action has been frustrating because we know it's a once-in-a-generation asset that absolutely merits a much higher valuation, especially when we compare Corvette to its Australian peers and the valuations that a lot of those companies are and were attracting either before they were bought out or since. So thoughts technically on Patriot.
I think the resource sector has been frustrating across the board. I mean, coming out of 2023, we haven't really seen a post-tax loss selling bounce, right? At least I haven't. I don't know what you're seeing out there. And with notwithstanding uranium, I would say, but we can talk about that later.
Just touched
Lithium
100,
continues.
by the way.
Did it really? Wow. I did not see that. That's very interesting. Made me lose my train of thought. Good Lord.
Sorry.
No, that's all right. But the lithium sector itself has been soft, not just Patriot, right? So we know lots of the equities are down, even the Albemarle's and the Allchems of the world, which, by the way, should start trading here this week under the new name. But so the entire industry has been soft, and the headlines haven't helped. Like there was a headline this week. Remember last year, Hertz was selling or buying all these electric cars, right? And Hertz is getting in. These rental car agencies are buying all these cars. Well, this week there was a headline that Hertz is selling a bunch of electric cars because the demand hasn't materialized yet. And they're using the proceeds to buy internal combustion cars, right? Going back to like gas engines. So those sort of narrative headlines don't help. At the end of the day, the supply and demand fundamentals based on the gigafactories and the projections and all that still stand. And so we're generally in a pullback in the sector. So I did resources down to lithium, and I'll get all the way down to Patriot. But Patriot specifically took off like a bat out of hell in 2023. And that's where the gap materialized. It's been exactly a year. That gap was in the third week of January 2023 when the shares gapped up from low $8 to above $9 in one day. Well, that kind of gap, as I've told you many, many times, it can't exist. Like it has to get filled. It's one of the things I learned very young from older traders, old publishing company that I used to work at, is gaps get filled.
Gaps get filled.
That's one of the things. So there was a gap on the chart, and I've told you that a lot, and it pulled back to that level this week. I had a limit order set. I told you I would buy more if it got to that level. Now, is that the absolute bottom? Like, does the share price do a 3-point turn right at 815 or 820 or whatever it is? I'm not sure, but what it does is it alleviates that overhang or that concern from the chart, from technicians, and it fills that gap, which needed to be done for shares to go higher. I was telling you, and I told subscribers and talked about on this podcast last year, there was a gap in the Bravo mining chart, which is another super high quality play that has been successful for us and delivered returns. Went from something like 64 cents where we financed it to well above $3, but there was a gap in the chart. I forget where it was now, 260 or 270, 280, somewhere around there. And it had to pull back to that, and it did. But it can linger around there because what happens is it can end up consolidating around the gap in the chart. So all that to say, I'm content to buy here. I did buy more Patriot at this price. That was what I was waiting for to buy. But I can't be 100% sure that that's a bottoming signal for Patriot or the entire lithium space, right? But I do think that it's getting oversold in general, not just Patriot, but the entire lithium space again. So when I look at other companies that I'm involved in, like Critical Elements, for example, and that stock's back near 52-week lows as they've yet to get a financier partner to the table. And so anyway, my answer is getting long in the tooth, but the gap filled and I bought more. And I think lithium in general is getting pretty cheap.
I like it. It's not getting cheap, and it's not going to get any cheaper anytime soon, is uranium, right? I mentioned that uranium markets just reported that it touched the $100 level. It's playing
how much was that up today? There was multiple dollars in one day.
Absolutely. Yeah. I mean, I think it opened at 95, right?
Right.
That was the last close that I had seen. And if the print that I just saw here on Twitter is accurate, or X is accurate, jumping from 95 to 100, and the utilities still haven't come off the sidelines makes my contrarian art giddy, right? Because I know we positioned well for it ahead of time, had subscribers positioned well, and now it's time to sit back and watch the gains that pile up, which is good in light of the pullback that a lot of the resource space has experienced.
I'm super excited about uranium, and I think we played the pullback beautifully. Some people, especially on the X, were complaining, throwing in the towel, similar as we saw before. And I was telling you, in fact, I think one of the titles of the podcast a couple of weeks ago was uranium, like gaining steam for next leg higher, or gaining energy for next leg higher, or something like that. And so we bought Energy Fuels at dip below 7. I think that's a good value. And not only is the spot price shaping up well, but other things continue to play out. And I've said this a lot. So, but things continue to play out. So Here goes my broken record. For a while we were waiting for all these things, right? Japanese restarts and
Yep.
whatever it was, small modular reactors and utilities to come back in. And now all these dominoes are falling, right? Like Japan has recommitted to nuclear and said they're building more plants. And not only are all these dominoes falling, but like new ones are coming into the fold that weren't included in like the previous bull case scenario. One thing I saw in the past couple of weeks was like France extending the life of its nuclear reactors, for example, which and wasn't accounted for in like, previous demand projections for uranium. And then this week there was more government action with DOE say it was going to spend, I think, $500 million to secure HALEU for, future U.S. Requirement needs. And so you continue to be inside the bull market, which is the line I've been using that you anticipated for so long. And now things are happening that, and you have to play differently. It's not just buy and wait, but it's, be able to analyze pullbacks and where you're at in the cycle and be willing to entertain new ideas. Like I told you about a company called Nuclear Fuels recently, and you were telling me about, Premier American Lithium. Like there's new deals coming because we continue to be in a bull market that plays out. So spin outs, consolidations, new issues, et cetera. And I think it's going to continue to be fun. Trees don't grow to the sky, of course, but the uranium stocks haven't grown to the sky. That's one of the things we've discussed in the past couple of weeks is that they haven't kept up with that uranium price. And so now there's a gap between the uranium price and the uranium equities. And as with most things in life, the truth is probably somewhere, in the middle. The uranium equity's got to go up a little bit, and you probably get a little bit of a shakeout in the uranium price before, you overshoot to 150 or 200 or whatever it ends up being. But that's where we are in the cycle, and those are the things to be paying attention to. And it's been fun to, buy stuff on pullbacks and watch things go to new 52-week highs and, look at stocks that you were buying in 2016 and 2017 and see how the returns have shaken out. What's not so fun is taxes, which we may also talk about in this episode.
Oof, tell me about it. Let's give people their money's worth here, Nick. Free podcast. What do you like in the uranium space? And I'll share a couple of names because I have a couple that we helped finance recently. I personally participated in the standard uranium financing market cap of $11-12 million, I believe. It hasn't participated higher with the rest of the uranium equities. So I'm eager and excited to see what the company has in store this year. Good team, good projects. I expect a lot of activity. The second one that it's open right now, right? We have a second uranium company. I won't give away that name, but that has a market cap of $4 or $5 million, which is a measly market cap in these markets. I think, when it's all said and done, these uranium names that have $5, $6, $7 million market caps are going to be trading in triple digit million market caps, not $1 million market caps.
The one I bought most recently is the one I just mentioned, Energy Fuels. We've been in that since a $4 handle. It ran to over a $7 handle, and then I just bought more when it pulled back below $7. There's other uranium stocks that I own and that I'm bullish on, of course, but that's the one that I've purchased most recently. One that's done really well and that didn't have a pullback that was commensurate with the rest of the space was UEC. I was looking at that chart. I was looking at that chart this week, and it's firmly at 52-week highs. It has some really good announcements with TerraPower recently, and that ties them directly into this recent DOE announcement, right? Because that Reuters article that I read was talking specifically about TerraPower. So that continues to be a go-to name in the space, obviously, and Amir has done very well to position that company for success in what is now an ongoing uranium bull market.
Absolutely. No, I couldn't agree with you more. I want to encourage and invite people to check out Nick and I's accredited private placement service. There's a uranium deal right now that's open that, subscribers are going to take advantage of. And again, I think, it's not too late to find companies that haven't participated in, the run up in the uranium spot price. There's a lot out there to like, there's a lot of ways to make money in this market, folks. Just got to pick your poison and stick to it, right?
Mm-hmm.
Got to talk crypto. Bitcoin ETF, big deal. Flirted with the 50,000 level before pulling back to 46,000. You are more in tune with crypto. Mr. Chris Curl, our local in-house expert, has absolutely nailed the call, especially as it relates to Bitcoin, right? We allocated some 50,000 of our own money and then basically said, "Here you go invest in crypto coins for us." And look, in what's just now starting to perk back up, coming out of a tough bear market, that account is up some 55%, if I'm not mistaken, and he's just getting cooking. So I'm excited to see where that goes. Thoughts there on the ETF approval and how you see things playing out?
Yeah, it's good to be up on real money in a crypto portfolio. It's good to have skin in the game, and not just for us, but for subscribers as well who have followed him into the various cryptocurrencies, altcoins, and projects that he's recommended. And I think just getting started, given the Bitcoin cycle that we see ahead for catalysts that Chris has laid out pretty quickly.
Yep.
One of which you just mentioned was the approval of a Bitcoin ETF, which happened last week by the time you watch this, which saw 11 new Bitcoin ETFs start trading in one day from, such big houses as Fidelity and BlackRock, for example, which obviously begets a lot of buying in the Bitcoin space, which you saw reflected in the price run up from $44,000 or $45,000 to close to 50, as you just said very quickly. I don't know if it's going to, continue going to the sky. You have other catalysts that are going to play out. The next one is going to be the halving. And so maybe we should get Chris on here to give us an update. But Bitcoin is bullish. Ethereum was up significantly as well on the news. I'm not sure you're going to get an Ethereum ETF at all or anytime in the near future. But other coins are going up as well. Like he's made a lot of money on Solana. And so
Yep.
there's other things to buy that get bullish when Bitcoin gets bullish. And Chris writes about that. The other thing I'd say is this. It changes the game a little bit, not just for Bitcoin, but for investors, right? Because it was pretty hard to own Bitcoin. Not hard, I shouldn't say hard. You had to do some different things to own Bitcoin, especially if you wanted to self-custody it, as I've told you I do with my Bitcoin. But now, just like gold, you can go out and you would buy a GLD to put in your IRA, for example, your retirement account. Now it's very easy to put Bitcoin in your retirement account. And so that's interesting to me, right? Because if you can buy a Bitcoin ETF and not have to pay gains on that, and you're expecting the coin, as I am, and as many other people are, to go to six figures or perhaps even higher, then that's a pretty interesting proposition to not have to pay taxes on that, especially if you can get it in a Roth. So it's certainly a watershed moment for the entire crypto space to get these cryptos approved, and I think will bring more interest into the space and get more buying over time. And just looking at search trends and Twitter trends, et cetera, the things I've seen trending in the past couple of days are BTC, Bitcoin, ETF, Fidelity, Vanguard, even though Vanguard's not going to do one. But these are the things that, are driving searches and driving engagement, and then people are clearly interested. So we'll see what happens, but these other catalysts are going to continue to materialize as we get into the spring of 2024. So worth following that real money portfolio, I would say, because we don't expect to lose money, right? We would have given him $50K to blow. And so he continues to buy things. Those issues come out every 2 weeks, and he's done a great job at showing people how to buy coins and the exchanges to use, et cetera. So by all means, check out the Chris Curl's Crypto Cycle and his $1 Million Crypto Club.
We had a really good conversation with Chris earlier in the week, and we were talking about the type of returns that big fund managers would need to walk away from the space, right? And some people said, 25% annually, and some people said 15% annually. And the number was comical, right? The actual number that a lot of these fund managers cited on a year-over-year basis for them to just walk away from the game was, you want to tell them, Nick?
It was like 3 to 5%. And we're talking about people who manage, billions and billions of dollars, endowment funds and things like that. But it's just interesting to look at the difference between how, a professional money manager looks at returns and cycles and performance versus, what has seemingly become not run of the mill, but expected in the newsletter space, right? Where people are constantly talking about and seeking out multiples on their money and 1,000% returns. And by all means, those are great. I mean, being up 10,000% on Patriot changes lives, of course. But you're talking more about speculation and
sure.
You're talking more about speculation. And what happens is you would never, or you shouldn't, I should say, put enough capital in those things. I know you're laughing, Gerardo, to do that year after year, right? So when you're talking about how money is professionally managed against the
Yep.
S&P using bonds and large cap funds and ETFs, the expectations are much lower. And so for those of us who don't have the balls to roll the dice like that with 16-cent stocks, and do have a portion of our portfolio in safer things, it's good to be able to outperform the market as we have with foundational profits, is what I was going to say. So this is where this conversation goes. I'm sort of ranting, but I was reading this Fidelity report the other day, and Fidelity is huge. They have 45 million retirement accounts, right, in Fidelity. And they put out a report that said those accounts haven't gained any value in the past 5 years. The average balance heading into 2024 is the same as the average balance in 2018, 2019. And that's alarming, right? It means Americans haven't had any appreciation of their retirement accounts in half a decade. And then what was more interesting is it wasn't just because the stock market hasn't gone up in the past 2 years. It was because people are taking money out of them because they can't afford basically their day-to-day lifestyle. They're taking money out to afford their homes, to avoid foreclosures, and they're taking money out for healthcare and things. And so anyway, it gets into a broader conversation, but I was thinking to myself, where is this growth going to come from if the consumer is, already tapping their 401ks and IRAs for hardship withdrawals? But the point I was going to make was that certainly my retirement account is not flat for the past 5 years. And the foundational profits portfolio in that time has outperformed the S&P by more than 25%. And if you pull back to 10 years, because I've been doing this a long time now, if you can see my gray patch, is we've outperformed the S&P by more than 100%. So anyway, just some things to think about there in terms of returns. And we got off on a little bit of a tangent, but we made a lot of money on Bitcoin and altcoins deliver, these huge returns that people get excited about, and small cap mining stocks can deliver huge returns. And that's wonderful. And we offer services for that, right? Like specialized trading and or speculation services. But, there's a whole cadre of the investment world who would be content with 3 to 5%. And if that's you, I've got good news for you. I can probably double that fairly easily. So anyway, all that to plug our services, I guess. Foundational Profit,
absolutely,
the Crypto Circle, and for the more speculative stuff, Junior Resource Monthly, and soon to be Junior Resource Speculator.
You got it. And look, I'm going to plug the Crypto Cycle one more time, just because Chris has been great. And then to finish that conversation, when I asked Chris what he would need, he said, well, if I get 300% on this 50,000 that you guys gave me to allocate, I would be disappointed with those returns. We don't get into trading coins and crypto for 300% returns. It has to be more lucrative. So if you're wondering what kind of pressure and approach Chris puts on himself to deliver, that he'd be disappointed with a 300% return if that's all that portfolio turned into. So that brings me to you keep saying the T word, taxes. We know it's that time of the year, Nick, and I mean, look, the beautiful thing about gains it means we made money, right? And the not so beautiful thing is Uncle Sam definitely wants his cut, and so you want to talk about taxes a bit?
Yeah, there's a couple points I wanted to make. I'm not sure if they're cogent or if they relate to each other, but I'll just blurt them out. So tax day is obviously April 15th, but you can start filing on January 29th, which was recent news that just came out. So worth mentioning that. But the two other points I wanted to make is that you and I often delay filing our taxes, right? Because
every year.
Right. Well, here's what I'm going to say. I had a discussion with my accountant recently, and accountants often encourage you to at least, if not file on time, prepay,
Sure.
pay quarterly, whatever. So you're not paying the penalties and the interest expense, which I always do. I always pay the penalties and then the interest expense. But what's changed this year is that interest rates are up. And so the IRS takes full advantage of that, right? And so the penalty that you'll be paying this year is much higher than it was in previous years because we're no longer in a zero interest rate environment. And so it's worth taking a look at that, because depending on what your tax bill is, in that interest rate, the penalties are going to be much higher this year than they have been in previous years. So that was the one thing I wanted to say. And then the other thing I wanted to say sort of relates back to, we were just talking about the credit worthiness of the United States and the ability to raise or to the ability to write more checks and continue to fund the debt. Well, you know how a budget works, Gerardo. You either have to spend less or you have to bring more in, right? And
Yep.
so I don't know about you, but our government hasn't been in the business of spending less for,
No.
I don't know, a half a century or so or longer, 80 years, probably since World War II. So also, you know, in that early part of that last century, they instituted the thing called the income tax, right? Which we were just talking about,
Yep.
which nobody likes to pay. And so I need to prepare a little bit more to have a broader discussion about that. But, you know, one of the things that's going to enter this, you know, fourth turning dialogue in the next couple of years are these hard questions, right? We talk a lot about the social side of it and things like that, but there's a fiscal side of it that has issues as well. And we talk about how problems are going to be solved. If you remember, well, you won't remember because you weren't alive, but, you know, in the last fourth turning, to solve some of these problems, they did raise taxes, right? And that's going to happen again, is the point that I was going to make, right? We know that, you know, wealth is increasingly coming under fire and focus from the government. You know, the Democrats talk about, and Biden in his last election run talked about, you know, staffing up and fully funding the IRS, for example. And we know since, you know, 2001, there's been an increased focus on transactions, right? The suspicious transactions forms, et cetera. And I don't know about you, but I've been writing checks. We say writing checks into companies for 10 years or so, but really you send a wire, right? And I'm starting to rant a little bit, but what I've noticed in the past 10 years is the questions that my bank asks me when I send out those wires, they haven't been reduced. They've been increased, right?
Yep.
As far as, you know, why are you sending this money? Where is it going to? Have you confirmed? What are you doing with this money again? And
Yeah.
I've seen that increase. Anyway, I've been seeing that increase in the past couple of years, just sending out my own personal money. And so what's going to happen as we get into this political turning is an increased grab from the government for tax revenue, right? From corporations and wealthy individuals. And that's just something to be cognizant of. That's nothing new, but given that we're coming up on tax time and the increased interest rates that I was just mentioning, I mean, you know, one of my tenets has always been, you know, pay as few taxes as possible, you know, however that is, through good capital harvesting and tax management, having a good accountant, getting good advice, et cetera. And so just putting that out there again in the ether, because the government's need for tax revenue isn't going to decrease anytime soon.
No, it's not. 2024 is off to a really interesting start, right? It's an election year. We have wonky markets, and then we have weather patterns that are increasingly volatile, right? Just here in Austin, Texas, I went for my jog this morning. It was 71 degrees. Next 3 days, in 3 days, there's going to be a low of 13, 14 degrees, right? And so freeze ups here in Austin and just outside of Austin in Georgetown and Round Rock, where I'm at, are just a part of the annual norm now, right? The last 2 winters here in Austin have been the coldest winters on record, and this year doesn't look like it's going to be very forgiving. What do you make of these weather patterns? I mean, we can hate the policy around climate change and the politics behind climate change, but I mean, it's climate, it changes, right? It's very real. Doesn't necessarily mean it's getting hotter. Sometimes it's getting colder. Any thoughts there, Nick?
Well, I've long said that climate change is real. I mean, you can see the changes in the intensity of weather patterns, whether it's temperature or rainfall or winds. And you just mentioned a couple of those things there. So you're getting the temperature, right? And I saw that it's supposed to get cold in Austin, Texas again. And you guys had problems with that a couple of years ago, led to freezing of infrastructure, and brownouts and blackouts and that sort of stuff. And really, in the past couple of weeks, it's been a nationwide phenomenon of extreme weather events. On the East Coast, there was a wind and rainstorm that swept the entire eastern seaboard. We have a colleague in Charlottesville, Virginia, whose basement flooded with hundreds of gallons of water. My parents are in the northeast corner of Maryland. My dad said they had multiple trees down, winds near 70 miles per hour. He said they have a trampoline for the grandkids. He said he staked it down with heavy rebar, like down into the ground, and the wind was so strong it pulled it up. But anyway, and then on up northward into Philadelphia, we have colleagues and friends who are without power for 2 or 3 days. And I've read reports that some people in the greater Philadelphia area are going to be without power for 5 or 6 days. That's relatively unheard of in the 21st century on the eastern seaboard. So these storms are intense, and they're damaging the infrastructure. Here in Spokane in the Pacific Northwest, I just wrapped my well up in insulation because we're going to go to -10 or perhaps a bit lower in the next 4 days. Put the heat lamps out for the chickens, did all that good stuff. And yeah, the extremes are such that it's affecting lots of stuff. So I don't want to get too long in the tooth, but one is insurance. We've seen it being increasingly difficult to get insurance in some coastal cities that are at risk of flood and more intense storms. Even where I live, because I live in a cabin constructed of timber logs, it's tough for me to get insurance because we're in a fire area. And as you probably know, those fires aren't getting any less intense or frequent.
Nope.
The past 2 summers have been pretty dangerous for fires around where I live. And so I tried to switch, in fact, insurances a couple of months ago, and some carriers told me outright that they wouldn't insure my home. So there's that aspect of climate change going on. But then there's the opportunity, right? Which I'm keenly interested in and have been for over a decade now. And that's the solutions that emerge for decarbonization, electrification, and all these trends that come from the solutions for climate change. So obviously, one of the big things recently has been the not aptly named Inflation Reduction Act. But those billions are starting to be spent by utilities and other companies to carry out all the things that were in that bill, from batteries to infrastructure, grid build outs, electric charging stations, wind farms, all the stuff, right? It's starting to happen this year. So using the weather as an in to talk about some of that stuff, it seemed like a good way to do it, because from the West Coast where I am to Texas where you are to the East Coast, as we just outlined, significant grid challenges. We lost power the other night. We had a windstorm. This cold front came in, and it came with 50-mile-per-hour winds. And we lost power the other night. One thing I would say is that we've taken preparatory steps because some of us saw these things coming, right? We saw that the climate was changing, and I knew that there was going to be stress on the grid. And so my backup generator turned on, and my kids had their nightlights while the power was out for the neighbors. So it's good to plan, and it's good to have foresight. And that's not just about your house and your grid and your generator, but it's also about how this affects or can affect your portfolio. So all that to say, buying things that benefit from that, not just lithium stocks and uranium stocks, but also select utility stocks, and even, inputs for some of these batteries and transistors that we need. So, and I also think it's going to be a pretty hot debate topic, by the way, as well, once we get past this Republican primary and into the lead up to the general election. So stay tuned for more, but we do have a new video out about this election and all the money that's going to be spent on renewables and how that could, play a part in the outcome. So we'll put a link up for you to check that out.
I'm supposed to remind you, as always, to go to dailyprofitcycle.com/subscribe for all my rantings and ravings, Mr. Hodges' insights, and the insights of our talented group of editors that cover everything from tech to crypto to resource stocks. You name it, you'll probably find some good, useful, free information there. Mr. Hodge, anything else you need to get off your chest? That $100 print, by the way, on uranium is legit. Officially up $5.20 today. And I don't think it's going to be long before we get to the $150 level. Buckle up, everybody. It's going to be a profitable year to be positioned in the uranium space. Lithium will come after it. Copper will come after it. Gold will go alongside with it. But it's uranium time right now.
And we'll be talking about this weekend. That's how I'll send you off at the Vancouver Resource Investment Conference, January 21st and 22nd, I believe it is, in Vancouver, obviously. So hope to see you there. Our flights are booked, I believe, and I'm about to send over the title of my talk. So if you're around, hope to see you there. And if not, Cambridge House typically does a good job of getting all those talks and sessions out on their YouTube channel. So stay warm and have a good week.
Looking forward to it. I am Gerardo Del Real along with Mr. Nick Hodge. This was your 252nd episode of Investing in Bizarro World. Have an awesome week out there, everyone.
See ya.
Hey there, you independent-minded investor. If you like this video, make sure to tell us so by clicking the like button below. Subscribe to our channel so you never miss another one. And share it with everyone you know on social media. You can also click the link in the description below to check out more information-packed videos just like this one. Thanks for watching.